Here's something most buyers don't realize. The average first-time homeowner in 2025 spends nearly $15,000 more than they expected after closing on a house. That's right, 15 grand in extra costs they never saw coming. And here's the crazy part. Almost all of it could have been predicted before they signed the papers. Today, we're pulling back the curtain on the hidden costs of buying a home. The ones that drain your savings, stress your budget, and blindside even the savviest buyers. So, if you're planning to buy a home this year, or even thinking about it, stay tuned, because knowing these hidden costs before you buy could save you thousands. Before we jump in, go ahead and hit that like button if you love getting real, no-fluff housing market breakdowns. And of course, subscribe so you don't miss future videos like this. Alright, let's break this down. The myth of the listed price. Most people see a home listed for $400,000 and think, okay, that's what it costs. But that's not the real price. The truth is, the listed price is just the starting point. It's like the sticker on a car before the taxes, the dealer fees, the title transfer, the insurance, and everything else that piles on. When you buy a home, the listed price is only one piece of the puzzle. The rest? It's buried in fine print and timing. Here's the breakdown. Even before you move in, you'll pay for closing costs, inspection and appraisal fees, title insurance, homeowners insurance, prepaid taxes and escrow deposits, repairs and move-in expenses, and that's before the first mortgage payment even hits your account. Closing costs, the silent budget killer. Let's start with the big one, closing costs. This is the category that shocks most buyers. On average, closing costs range between 2% and 5% of your loan amount. So if you're buying that $400,000 home with a mortgage, expect to pay anywhere from $8,000 to $20,000 at the closing table. Now you might be thinking, wait, that's insane. Where does all that money go? Here's where. Lender fees, loan origination, underwriting, and credit reports. Title services, to verify ownership and transfer rights. Attorney or escrow fees, depending on your state. Prepaid taxes and insurance. These get placed into your escrow account up front. Recording and notary fees, required by local governments. Mini story. I had a client, a first-time buyer named Ashley. She had saved $10,000 for her down payment and thought that would cover everything. But when her lender sent the final closing disclosure, she nearly fainted. $12,800 due at closing. She ended up borrowing from her parents just to seal the deal. That's the reality for a lot of buyers, not because they're careless, but because no one told them the truth up front. So here's the crazy part. Closing costs are negotiable. You can ask the seller to pay part of them or even find lenders who'll offer credit. But you can't negotiate something you don't know exists. Inspection and appraisal fees, the reality check. Next, let's talk about the home inspection and appraisal, the reality check phase. You can't skip it, and you shouldn't want to. The inspection protects you. It uncovers hidden issues, foundation cracks, roof leaks, mold, or old electrical wiring that could cost you tens of thousands down the line. In 2025, a standard inspection runs between $400 and $800, depending on the home's size and age. If you add specialized checks for radon, sewer lines, or pests, expect another few $100s each. The appraisal, on the other hand, is required by the lender to verify the home's market value. That runs another $500 to $1,000. Mini story. A couple in Palm Beach fell in love with a home listed at $525,000. They paid $600 for the appraisal and $550 for the inspection, which found termite damage in the rafters. They walked away. Those $100 in losses saved them from a $25,000 repair nightmare. So while it's a hidden cost, it's actually one of the smartest investments you'll make in the entire process. Property taxes and escrow deposits. Here's something every buyer should know. Your first mortgage bill will almost never be your only housing expense. Your lender will require an escrow account, a reserve fund they use to pay your property taxes and insurance on your behalf. To set it up, they'll collect a few months' worth of those payments up front. So if your annual property tax is $6,000 and insurance is $2,000, you might pay $2,000 to $3,000 up front at closing to fund the escrow. That's money most buyers don't plan for. And here's the twist. That escrow deposit isn't optional. Even if you have great credit and a big down payment, most lenders still require it. It's one of the biggest financial curveballs for new homeowners because it's rarely discussed until you're deep into the loan process. Homeowners insurance, the hidden cost that keeps rising. Now, let's talk about homeowners insurance, the one cost that's climbing faster than most people realize. In 2025, the average annual premium is around $1,900 nationwide, but in high-risk states like Florida, Texas, or California, it can exceed $4,000 to $5,000. That's not a small difference, and it's going up. Why? Increased weather claims, rebuilding costs, and insurers pulling out of certain markets. Example: a buyer in Fort Lauderdale budgeted $2,200 for insurance. When she got quotes, the lowest was $3,800. She had to adjust her entire budget just to close. Takeaway: shop for insurance quotes early, before you're under contract. It's one of the most overlooked parts of the process, and in states like Florida, it can make or break your monthly affordability. Title insurance and recording fees. Title insurance sounds boring, but it's essential. It protects you from legal claims if someone later disputes your ownership, like an unpaid lien or a clerical error. It typically costs 0.5% to 1% of your purchase price. On a $400,000 home, that's another $2,000 to $4,000. Then there are recording fees, courier charges, and sometimes transfer taxes that can total a few hundred more. So when you add all this up, title, escrow, taxes, insurance, appraisal, inspection, it's no wonder the average buyer in 2025 is spending 10% more than they expected at closing. But we're not done yet. The move-in surprise. Once you get the keys, the hidden costs don't stop. They just shift forms. Let's start with the obvious. Moving expenses. Hiring movers, renting a truck, or even just buying boxes adds up. A local move can run $1,000 to $2,000, while a long-distance move easily hits $4,000 plus. Then there are utility setup fees, new locks, appliances, furniture, and sometimes HOA initiation fees for gated communities. Mini story. One buyer told me they spent nearly $7,000 in the first 30 days after closing. Not because of emergencies, but because they hadn't factored in blinds, paint, landscaping, and basic furnishings. Takeaway: the first 30 days after closing are the most expensive part of homeownership, even more than the down payment for many buyers. The hidden emotional cost. Here's something few people talk about: the emotional cost of surprise expenses. Buying a home is supposed to be exciting, but for many, it becomes stressful when those unexpected bills start piling in. Financial anxiety can take the shine off your dream home quickly. That's why the smartest buyers over-budget, not by accident, but by design. If you think you need $15,000 for closing and move-in, plan for $18,000 or $20,000. If you expect your payment to be $20,500 a month, make sure you can handle $20,800. Because the truth is, real estate rewards those who prepare, not just those who qualify. If this breakdown is opening your eyes, hit that like button and let me know in the comments. What surprised you the most about your home buying experience? Did you run into extra costs you didn't expect? Or maybe you're planning to buy this year and just learned something that'll help you avoid a big mistake. Drop your story below. I love hearing how these lessons play out in real life. And if you haven't yet, make sure you subscribe, because in part 2, we're going even deeper into the hidden costs most people miss after closing. Things like maintenance, repairs, HOA fees, and how inflation in 2025 is quietly inflating those expenses. Picking up where we left off. So, in part 1, we uncovered the hidden costs that show up before and at closing. Those sneaky fees and charges that makes the sticker price of a home only part of the story. But now, we're getting into the real eye-openers. The hidden costs that hit after you get the keys. The ones that catch even experienced buyers off guard. Because buying the home is just the beginning. Owning it? That's where the financial surprises really start. The maintenance myth. Let's start with the single biggest hidden cost: maintenance. Here's the crazy part. According to Home Advisor's 2025 data, the average homeowner spends between 1% and 4% of their home's value on maintenance every year. That means if your home's worth $400,000, you could be spending $4,000 to $16,000 a year just to keep it running smoothly. Roof repairs, air conditioning tune-ups, landscaping, and plumbing leaks, they all add up. Mini story. A buyer in Jacksonville bought a 10-year-old home. Everything looked perfect during the inspection, but within 18 months they replaced the water heater, repainted the exterior, and had an AC compressor fail. Total cost? Nearly $7,500. That's not a rare case. That's the reality of owning property. Takeaway: if you're buying a home, plan for at least 1% of the purchase price every year for maintenance, more if the home's older or in a harsh climate. The true cost of repairs. Maintenance keeps things working. Repairs fix what breaks. And in 2025, repair costs are higher than ever, partly because of labor shortages and inflation in construction materials. Example: roof replacement, $12,000 to $18,000. VAC system, $8,000 plus plumbing or sewer repair, $3,000 to $10,000. Foundation work, $15,000 and up. Here's the crazy part. Even small issues can snowball fast. That $300 leak today can turn into $3,000 in drywall and flooring damage tomorrow. And get this, 65% of first-time homeowners in 2025 said they had to dip into savings or credit to cover their first major repair. That's why the smartest move isn't just saving for your down payment. It's setting up a home repair fund. Start small, even with $100 a month. By the time something goes wrong, you'll thank yourself. HOA fees and special assessments. Now let's talk about something that can quietly blow your monthly budget: HOA fees. In 2025, the average homeowners association fee nationwide is about $309 per month. But in many urban or coastal communities, it's closer to $600 to $800. And that's just the base. The real surprise? Special assessments. That's when your HOA decides the community needs a new roof, a repaved parking lot, or upgraded landscaping, and they split the cost among homeowners. Mini story. One condo owner in Miami told me their HOA hit them with a $9,000 special assessment to replace the building's elevator system. No one had warned her. It wasn't in the listing, not in the inspection, and barely mentioned in the HOA docs. Takeaway: before buying in an HOA community, read the meeting minutes and financial statements. If the HOA has low reserves and old infrastructure, those low fees might be hiding a financial time bomb. Utilities and inflation. This one hits differently in 2025. Energy costs have risen by about 8% year over year nationally, and water rates have increased in most metro areas. So even if your mortgage stays the same, your monthly utility bill could creep up hundreds of dollars. Example: a family in Loxahatchee moved into a 2,400 square foot home, expecting a $250 power bill. With the recent rate hikes and hot summer temps, they averaged $380. Add water, trash, and internet. Their monthly total was $650. Here's the crazy part. Newer homes with smart thermostats and efficient insulation are saving 25% on utilities compared to homes built before 2010. So sometimes, paying a little more upfront for a newer or upgraded home actually saves you more over time. Property taxes and insurance creep. Remember those property taxes and insurance premiums we mentioned in Part 1? Well, they don't stay static. In most areas, property taxes increase 3% to 6% annually, and insurance premiums are rising even faster, especially in coastal states. Mini story. A homeowner in Palm Beach bought a home in 2021 with a $3,200 annual insurance policy. By 2025, renewal came in at $5,100, without a single claim filed. Takeaway: always budget for increases. When you calculate your monthly payment, add a 10 to 15% cushion for future rate hikes. That's what seasoned homeowners do, and it keeps you from being blindsided down the road. The furniture and appliance trap. Here's the part almost everyone forgets. Once you buy a home, you need to fill it. Furniture, decor, appliances, these are costs that sneak up fast. A new fridge? One of $500. Washer and dryer? On $200. Living room furniture? $3,000 minimum. Even simple things like curtains, rugs, or light fixtures can easily hit $5,000 plus by the time you're settled. Here's the crazy part. Studies show that the average homeowner spends 20% more on move-in purchases than they originally planned. So if you budgeted $3,000, you'll likely spend closer to $3,600. Pro tip: buy the essentials first. Let the rest evolve. Your home doesn't need to be perfect on day one. It just needs to be functional and livable. Before we keep going, a quick word from today's sponsor, New Silver. If you're serious about real estate, whether you're buying your first home or planning a fix and flip, New Silver offers fast, flexible loans that help you move quickly when opportunity strikes. They're built for investors and active buyers. No slow bank process, no red tape, just streamlined approvals and competitive rates. Click the first link in the description to check out New Silver's fix and flip and rental loan options today. Because in a market full of hidden costs, speed and flexibility are your best tools. The investor angle. Let's shift gears for a second. Understanding hidden costs isn't just about avoiding stress. It's about making smarter investment decisions. The most successful real estate investors don't just analyze price. They analyze total ownership cost. That means factoring in taxes and insurance volatility, maintenance and repairs, vacancy and turnover costs for rentals. Long-term utility efficiency mini story. An investor in Orlando bought two similar homes. One was a 1960s fixer and one was a 2018 build. The older home was cheaper by $70,000, but after 2 years of repairs and higher utilities, the newer property was more profitable. Takeaway: the cheapest house isn't always the best deal. Total cost of ownership is the real profit multiplier. The cost of time. There's one cost few people calculate: the cost of their own time. Time spent fixing things, managing contractors, filing claims, or even just maintaining a property, it all has value. For investors, time is money. For homeowners, it's quality of life. If you spend your weekends repairing leaks instead of relaxing, that's a hidden cost too, one that doesn't show up on any spreadsheet. Here's the crazy part. Some homeowners spend over 300 hours a year on maintenance and repairs. That's more than a month of full-time work. So when you budget for your home, budget for your time too. If you're watching this because you want to grow wealth through real estate, listen up. New Silver isn't just for flippers. They also provide rental and bridge loans for investors who want to buy, rehab, or refinance properties strategically. They've helped thousands of investors move fast, often closing in days, not weeks. Check out the first link in the description for details, because in real estate, opportunity doesn't wait. The inflation effect. Inflation touches everything, from lumber and concrete to labor and lending. In 2025, construction materials are up nearly 9% year over year, and service rates for trades like electricians and plumbers have jumped 15%. That means the longer you wait to address repairs, the more expensive they'll get. Mini story. A homeowner in Sarasota delayed replacing their roof after a small leak. A year later, the same job cost $4,000 more due to inflation and material shortages. Takeaway: act early. Maintenance deferred is money multiplied. The smart buyer's strategy. Here's how to protect yourself. Budget 10 to 15% above your projected costs. That cushion turns surprise bills into expected expenses. Get multiple quotes. Don't settle for the first contractor or insurance offer. The range in 2025 is wider than ever. Prioritize efficiency. Energy-efficient homes cost more upfront, but save you big long-term. Ask better questions. During your inspection or walkthrough, ask about appliance ages, roof condition, and last major upgrades. Keep liquidity. Don't empty your savings to buy. Real estate rewards those who stay flexible. Section 13. The emotional ROI. Let's be real. No one buys a home just for the math. They buy it for stability, pride, family, and freedom. But when you understand the full picture, every cost, every responsibility, you gain more than a house. you gain confidence. That confidence is what turns ownership from stressful to empowering. So when you plan your next home, don't just dream about the kitchen or the backyard. Plan for the hidden costs that make the dream sustainable. Because peace of mind is the ultimate return on investment. So, what are the hidden costs of buying a home? They're the ones most people don't prepare for, but you will now. From closing costs to maintenance, from insurance to repairs, from HOAs to time itself, understanding these hidden costs is what separates smart buyers from struggling ones. If this video helped you see the real picture of homeownership, hit that like button, subscribe, and comment below. Which hidden cost surprised you the most? Have you faced one of these firsthand? Share your story. It helps others learn and prepare too. And remember, knowledge is your best leverage in real estate. The more you understand, the more power you have to build lasting wealth. I'm Rodney. See you in the next video.